All right, we just got the January inflation report. I'm going to go through it, how it affects the potential rate cuts for the end of the year, how it affects the housing market, kind of where we're at right now, and what you can expect for the remainder of the year. The report came in a little bit higher than anticipated, but it did come in lower than December. The reading was 3.1% year over year. Last reading was 3.4%, but the expected number was 2.9%. Anytime you're making a prediction in any market, if you miss it by an inch, it's a bad thing. You beat it by an inch, it's a great thing. What you can expect to see today is some impact on mortgage rates. Probably we're going to see a little bit of a spike. The reason is because a lot of economists and market predictors were anticipating potential rate cuts to start in May. And because of this reading coming in higher than expected, that most likely pushes any rate cuts out beyond that point. Before I go any further, check out the description below. You'll find a couple of links there. The first will give you a monthly home value estimate dropped directly into your inbox, and the second will allow you to search for all Triangle area homes. Lastly, please like and subscribe. It just helps YouTube know that you like the content. It helps us reach more people. My initial prediction was we probably wouldn't see rate cuts until July, but really it's anybody's guess. But some interesting things about what's going on in the market right now. Despite all that, listings in January, new listings that came to the market in terms of resale homes were up 17% over January of 2023. We just went through a year where a lot of people did nothing. A lot of people that wanted to move, outgrowing their house, maybe outgrowing their relationship, just choosing not to do anything because of the interest rates. And what I'm starting to feel in the market, what I'm starting to see in the numbers is the pain of not doing anything is starting to outweigh the pain of the higher interest rates. And we're seeing that in the new listing numbers, but we've got a long way to go. Right now, as I sit here, there are 6994 active listings in the entire Triangle MLS. Okay, 3482 of those are new construction. That's over 50% of the active inventory in our market today is new construction. That might not mean anything to you. So as a basis of comparison, in 2022, in all of 2022, before the rates started to increase, the total percentage of new construction as compared to the total amount of homes sold in our market was 24%. 24% of the homes sold in 2022 were new construction as compared to today. Over 50% of the active listings are new construction. So new construction is absolutely driving our market right now. And the way that impacts you, if you're thinking about selling, is that buyers' expectations have definitely shifted. A short while ago, because of the competition in the market, buyers would pretty much accept a home in any condition. Today, that's not the case. They're out there touring homes, and half or over half of the homes they're touring are new homes, and when they come to your house, they expect to see it as a new home. And if it's not, if it doesn't have new paint, if it doesn't have new carpet, if there's minor repairs that are obvious and need to be done and have been neglected, those things are going to impact the buyer's decision to make a move. My advice is, if you're thinking about selling this year, maybe you're part of that crew that sat on the sidelines last year and it's finally time to just get off the dime and do something because whatever it is about your situation just isn't working anymore, then you need to take a look at investing in bringing your home up to as close as possible to move-in ready condition. And that is a drastic mindset shift from where we were just a short 12 months ago. As we go forward through the remainder of the year, I still do anticipate rates to come down, start to come down, probably not until the third quarter at least. Like I said, markets probably going to force the interest rates up a little bit on this news, but I think that'll be short-lived. You guys feel it. We all feel it in the grocery stores. We feel it at the gas station. We feel it in our bills. It is just more expensive to live today than it ever has before, and it's taking a toll, and it's showing up in the inflation numbers. And you know, the reality is that we may never get back to a point where we were before, and the target that the Fed has set of 2% year over year might not be realistic. I hope it is, but it might not be. There's a lot of reasons why, but people are making more prudent financial decisions today because it's just tougher. It's just tougher to live, and it's tougher to pay your bills on a day-to-day basis, and the costs of just everyday items has gotten completely out of hand. keep in mind, when I say that inflation is 3.1%, what that means is that the cost of the things that you buy are 3.1% higher today than they were just 12 months ago. Okay? But 12 months ago, that number was 6.4%, which means that in January of 2023, everything you bought was 6.5% higher than January of 2022. And these things compound. It's not a straight line. It's an exponential curve. You have to put those numbers in perspective. It's not that it's 2% just, this straight line. It's more of an exponential curved graph, because 3.1% compounds on 6.4% last year, and so on and so forth. So all of that is to say, I think we're going to see more of the people who sat on the sidelines last year just bite the bullet and make the change. I'm talking to more and more people who are considering moving, or actually moving, in the process of moving right now, just because they want to, whereas last year, most of what we had was solely people that had to move. I think that's going to change this year, as the pain of remaining in an uncomfortable situation outweighs the financial pain of taking on a higher interest rate. So we'll see what happens. If you've found this informative, please like and subscribe. That helps us a lot. Just helps the Google algorithms know that this is useful information, and we appreciate that. Please comment below. I'd love to talk to you. If there's anything that you want to poke holes in, please feel free to, and I'll see you next time. Thanks.